Good evening. So putting together here just a quick market update video. We're going to have a look at the indexes, where they stand relative to intermediate term stage analysis. We'll look at the great 8, so our liquid names, Apple, Amazon, Netflix, etc. And then we'll wrap it up by looking at our watch list, where we have both long and short setup. So let's first start off by looking at the cues on the daily. You can see we're sitting just above the 50-day moving average, where there's been no real price action that would pull us out of neutral territory. We're kind of sitting in neutral territory. We would need to close 1 ADR above this 50-day moving average to get a successful bounce, or break below it by 1 ADR, that 1.5%, and close below it to get a successful breakdown. So we're just kind of chopping around, awaiting Netflix and Tesla earnings, which, by the way, are going to be very important. They're after hours tomorrow. And why they're specifically important, although not what I would consider higher percentage in terms of weight of the QQQ. So for instance, Netflix and Tesla alone or combined probably only make up like 4% of the QQQ. So it's not going to push it around too much, those two names alone. However, considering they're heavyweights, they're within the great 8. They are going to influence the thoughts of investors for stocks like Amazon, Microsoft, Google, Amazon, those that do have a lot of weight in the QQQ. If Netflix and Tesla report poorly, then those investors are going to think, okay, well, if those two names, those two large corporations reported poorly, then Apple, Microsoft, Amazon may as well. So they're going to start to play, if not defensively, they're going to at least be very cautious to buy. And then vice versa. If Tesla and Netflix are to report well, they'll have a little more optimism, perhaps start getting a little more aggressive to the long side. So they're going to really set the stage for the next week in terms of market direction. And until the next mega caps report, which I can't recall which one they are, I think, so Microsoft would be on the 24th, so about a week from now, Tuesday, we would probably ride out the momentum of whatever Tesla and Netflix put in play for us. So just something to keep in mind. Also, there's going to be gap risk because of Netflix and Tesla reporting. So just be mindful that if you're looking to put on fresh long positions, I would advise that you have some sort of cushion heading overnight, because you could potentially face a gap down that could, hurt you pretty bad. So just be mindful of that gap risk. Now, if we look at the QQQ on the 195-minute time frame, and we'll use our stage analysis here, we broke into stage 2 about 2 weeks ago, and now we're having our first test of the rising 30-week moving average. We're technically still in stage 2. If this moving average were to start flattening out and we were to lose this level, we would be moving into stage 4 breakdown. However, as of right now, pretty constructive. We gapped down today and we filled the gap up, and we closed in the middle range of the daily bar. So really, that's accumulation. Whenever whenever index or stock is gapped down and it's quickly filled, it's usually institutions purposefully gapping that index down or that stock down so they can buy at a cheaper price. Now, if we take a look at the SPY, we can see that we're also in stage 2. We broke out and we're just kind of consolidating now. On the daily time frame, the 50 days just right overhead right here, which is acting as a clear resistance for SPY. But we are in stage 2. So stage 2 for Qs and SPY. So intermediate term direction is technically long. So we're looking for long opportunities primarily. IWM is in a stage 1. So we had our first break above the 30 moving average. We had a pullback, and now we're pulling back up. We have a double bottom neckline. We also have a potential stage 2 breakout level to play. So if we can get over this 177.4 level, it would technically be pulling us into a stage 2 uptrend on the IWM, which is great. So now we would have all 3 indexes with a bullish bias. And when all 3 indexes are moving together, that's where you get the strongest, cleanest moves to the upside. Just like if they were all to be breaking down, we'd have the strongest moves to the downside. When the IWM in particular is breaking out, it's very beneficial for the market, because remember, this is representing a basket of 2,000 different names. So that basically is saying that the majority of the 2,000 are also breaking out of some sort of pattern. So it's basically giving some sort of breadth thrust. There's a lot more stocks participating in the rally, and that's how you get those strong momentous moves. So all 3 indexes right now, although kind of been consolidating lately, they do lean bullish. IWM is undecided, but if we get over this double bottom neckline, you're going to see in the watch list, I'm looking to play it long with the first price target being that 50 moving average, which also is going to coincide with the gap resistance, which is semi-filled, so it's not as significant. But all the indexes kind of bullish right now. That could change very quickly with earnings, though. So now if we take a look at the mega cap names, we got Netflix first. It's in a stage 4 downtrend. Just going to quickly zoom through this. Amazon is in a stage 2. Apple is in stage 2. Could be potentially stage 3. NVDA is in stage 4 after that huge gap down today. It was not friendly. Microsoft's in stage 2. Meta is in stage 2. Potential early stage 3. Google, same thing, early potential stage 3. Why? Because we are testing that moving average, which the first test of it basically is suggesting we might be moving into that stage 3. The fact that it's so steep likely wouldn't break down for a while, because this is going to need to flatten out much like this before you get that real momentous move to the downside. So still leaning stage 2. It could very easily just break out and give us a stage 2 continuation, but I'm just acknowledging the potential transition there. Tesla is just really, I guess it's in stage 2. It broke out right here, and it was actually a leader. It ran into this resistance level and is now chopping around. If you look at the daily on this, you could see that there's a clear contraction of volatility. You have a strong move down, and just look at this price. You have $87, right? Now you go up. Now it's about 64. Now you have 47. It's contracting. Now we have 36. Now we have 24. So there's a contraction. We have basically recoiling. So think of it as there's a whole lot of tension being built up here, and now tomorrow we're gonna have a catalyst. So whichever way we break, it's likely to be a very strong, powerful move. A lot of people got involved here. A lot of people stand to lose. There's going to be a very strong emotional response when we break out of this, and that's where momentum's generated. So I'm watching this very closely, not only because of its effect on the broader market, because I want to trade it. Obviously, I would love to break to the upside. If we were to break out to the upside, it'd be we'd be breaking out of a shape or pattern here. It would be a 3 trend line touch, and that's basically going to initiate the next leg up, and I'm going to be all over that. So keep an eye on this. The levels to really watch are going to be this trend line, so the low of today, and then the high of the 10th. Whichever way we break, if we break to the downside, we're losing the 50 moving average. If we break to the upside, we're not only breaking out of a pattern, we're also successfully bouncing off the 50 and likely to, at the very least, retest up here before consolidating. If we break down, it looks like it wants to retest the 200-day moving average. So just something to keep in mind. So that's Tesla. And then if we were to look at the FNG, which represents all of the great 8, all of the mega cap names, you could see that we are still in stage 2. However, we did test that trend line for the first time, so we could be transitioning into stage 3. We need to see how this reacts moving upwards. So I have it written down right here from earlier, 2 of the great 8 that are in stage 4, and then there's 6 that are in stage 2, with 5 of them potentially moving into stage 3. So really, all that's telling me is the market's very undecided, although it leans bullish, because once again, they're potentially transitioning into stage 3. Doesn't mean that they have already done so. So that would just take time. It would take another 3 to 5 days to really get an idea of that. And I think Netflix and Tesla will really help us paint that picture in the coming days. So once again, combining our analysis of the great 8, which once again, we do that because of the overall impact these names have on the QQQ. They make up about 50% of the QQQ alone. So you can imagine where these guys go is going to pressure the QQQ considerably. And the fact that the QQQ makes up such a large amount of the S&P 500, where these guys go, it's going to have a whole lot of an impact on the market. So they all lean bullish for the most part. Netflix is in stage 4. That could change tomorrow very quickly into stage 1, potential stage 2. And the others are all kind of just sitting in stage 2. So with that said, leaning bullish. Let's take a look at our watch list here. So focus list. Start from the top. Uber, it's a potential short. If you look at the daily, you can see we have this consolidation here. We also have a very heavy volume selling candle on the 13th that we kind of just been chopping around within. Just above, you have the 50 You have the 20 and the 10 EMAs all acting as resistance. You also have the high of this heavy volume close that acts as resistance as well. So there's so much overhead right here that this would need a lot of work before it could be a long opportunity. But with that said, we have a long-legged doji off of the 10 EMA, so it's clear rejection. You could use that to get involved if you want to go short, with the low of today being your entry for your short position and the high of today's candle being your stop loss. If you want to be more conservative, you could use the low of this candlestick as your entry for a short. And really, it looks like that 200-day moving average would be the next major level to go test. Now, if you were to enter on tomorrow, hypothetically speaking, short, your stop loss doesn't have to be this high of day. If you want to be more careful, or if you don't want to risk as much, you could just use the high of day at the time that the break occurred. So say price opens here, it goes up, and then from here it's where it reverses and breaks down. Your high of day right there would be your stop loss. Now, CAR is another potential short. You can see in consolidation, all the moving averages are rolling. Double top, a break below this heavy volume candlestick would initiate a short. I don't know what happened here. You have a doji on very heavy volume. That's interesting. Yeah, so that's another short. When there's one more, okay, cat is another short opportunity. So we're getting rejected at the 50. You can see it's starting to kind of roll, and it's a little bit of consolidation right here. So if we can break below this consolidation here, if we take a look at the 30-minute chart, do we have any patterns? If anything, we have a inverse head and shoulder, which is bullish. But if we were to break below this level, it would invalidate this pattern, and we could see at least a test of the former low of 10.6. Not my favorite setup, but I do love how the 50 is starting to be respected as resistance, and that could be enough pressure to push it down. So it's one to keep on the radar. Out of those three, my favorite's CAR for short. So now let's look at some long setups. PDD, you can see we have a doji, a reversal candlestick, off of the 10 moving average. Uber, reversal candlestick off the 10 moving average. So we're just doing the complete opposite here. So we're looking for a break above this doji, which would also be breaking this, although not even a confirmed downtrend line. It's we would at least be starting to move, give us a higher high, right? We have a low, high, higher low. We'd have some sort of uptrend in the making. And we'd also be above all these moving averages on the 30-minute and the 10-minute, which is just one of my rules that I need. If you take a look at PDD, you can see it was down about 0.45. If you compare that to the Chinese index to kind of get an idea of the relative strength, this was down about 1.35%. So a little bit of relative strength there with regards to, if we're to compare it to the index that it's pegged to. So we just want to see a break above this candlestick, and we want heavy volume coming in. It's the exact same trade setup that we took for PLTR today. We bought over the reversal candlestick's high, and we were even able to trim some for profit. So it's definitely a more aggressive entry. However, we don't have to combat all the volatility that comes with a breakout up here. It's what's referred to as a cheater entry. So you're taking a little more risk. However, if it works out, you have a whole lot more cushion to work with at the breakout level. So that's PDD. Crowd, this looks actionable as early as tomorrow. However, I would prefer another day or two, let those moving averages really catch up. We're looking at a break over 190.33. SMPS, since this is a bit of a heavy volume doji, I want to clear that before going long. So I'm looking for an entry over 50, that's an expensive stock, 503. ZS, same thing as crowd, just looking for a break over the most recent high. Fast needs another, 3 to 5 days. Tesla, we're waiting on earnings. We're waiting for that catalyst. We'll align ourselves with whatever way this consolidation resolves. EXPD is breaking out of a base. However, it's extremely volatile, so I don't think I'll, it looks like a bar could get rid of that. DraftKings, just like Tesla, we have that that contraction. Boom, boom, gets tighter, 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 and now we just got to break out. Whichever way we break out, likely to be a lot of momentum. Palantir, we're already in it. If we break above I'll probably trim another one, probably trim another half as we move up to the 18.4 resistance. And then if we break through with enough volume tomorrow, if we do break out tomorrow, I would look to put on another position. We'll have to see. But we're sitting very comfortably here. We're just going to let it work. GPS, we scouted this all today. So 1, 2, 3, 4, very slight pause, 5, 6, 7 days up in the last whatever. So it's short-term extended without a doubt. Also, if you note, the volume was heavier today than the entire previous advance, which, believe it or not, is actually could be a sign of a short-term top. Usually when you see volume either dry up a ton after a strong advance or become you get a pickup in volume, it will mark a potential top. Just something I've seen with experience. Watch it the next 2-3 days. Let's see what happens if that actually is the case or if it keeps running. But it is extended in terms of if we compare it on the 195 minute. So the TNA, this is the 3 times leverage for the IWM. It's giving us a double bottom. So if IWM breaks out from its double bottom, I'll look to go long TNA, simply because the contracts are more, they're cheaper, more people could trade it in the Discord. So we'll have a look at this over 28.6. We want to see volume through the pivot, and that kind of wraps up the watch list. So I hope this video proved to be useful. If you guys have any questions, as always, please feel free to reach out.